Okay, so I'm now live on Instagram. So as always, I do live streams to an audience on Zoom as well as on Facebook Live. But I use Restream, so I've been unable to figure out how to integrate into Instagram onto what I'm doing on using Restream. So on Restream, I'm using it to stream onto Facebook, LinkedIn, and Twitter. But so Instagram, I use my phone, so that's why it's so weird. So I apologize for that. So what I'm gonna do is let everyone in, and what I'll do is I'll disable the waiting room and I'll mute everyone to make it easier. Okay. So we're streaming this live on different platforms, mainly Zoom. So I'm talking to Zoom, but it's also on Instagram and Facebook and LinkedIn and YouTube as well. So sorry, let me just make sure that it is, yep, okay, yeah, so we're good. All right. So thank you for joining us this evening. We are going to talk about companies in Asia in general and in Singapore in particular who want to move to the US. So thank you for those who sent questions in advance. I did get your questions and we would go through them. But what I thought I would do is just go through a quick slide deck, which would speak to the larger issues. Now, you would understand that this is a huge topic, so it's absolutely impossible to cover everything in like one session. So what we want to do really is talk about what we believe to be the key issues that you should be picking up with your advisors. And hopefully it will arm you with the right concepts to engage your advisors in a more meaningful way. So without further ado, I'm going to share screen. All right, I apologize for those on Instagram that can't see the deck, but it's really quick and very superficial. I'll talk it through. All right, so just to provide context for who I am. So my name is Darren Joseph, and I work with the international tax team at Moores Rowland Asia Pacific. So we have 30 offices in just over, I think, 13 Asian countries. So we're as far north as Tokyo and Beijing and all the way down to Melbourne and Sydney. I've been sitting in Singapore since 2013. So I've been in Singapore for a while and I've been based in Singapore, even though I kind of move around. Well, pre-COVID, I probably moved around a bit more. But yeah, move around and work with clients in various parts of Southeast Asia and elsewhere as well. Because I am US qualified, I'm legally obligated to say, you know how it goes, that nothing that I say here should be construed as tax advice. We're having a general conversation about general principles, again, treated as an education piece. I'm trying to provide you with concepts that you would need to leverage to more meaningfully engage with your chosen advisors. So I may be a tax advisor, but I'm not your tax advisor. So please keep that in mind. Nothing is advice, and more importantly, nothing that I say here should be encouraging you to pay less than your fair share of taxes in any jurisdiction in which you're exposed. Now, having said that, why the US? Why do companies in Singapore and elsewhere consider moving to the US? And I put up some few key points. Number one, when people come to us is to raise funds. They have a valuation based in Singapore, the market, the liquidity is at a certain level. And everyone tells them, you have a great idea, you take this and you domicile this company in the US and your valuation will be 10x. So it's just, regardless of whether you have an opinion or not, this source of capital, especially for tech companies, it is venture capital central. is probably going to be the US. Some people have commercial reasons as well. Some people talk to us about branding. They think that their company or their value proposition will be stronger if it is that they are based in the US as opposed to Singapore. So it really is an individual decision among the founders or on the board of directors as to what your rationale might be. But it could be anything. If you have any particular reasons that I didn't really touch on here, please feel free to comment below. Just write your comments. I'll be interested to hear and to read your point of view. Now, in terms of your considerations, on the surface, sometimes you Google and it appears to be relatively simple. I just need to incorporate, and there are lots of websites that will do it for like $200 or less. Get me a company, but it's a little bit more than that. It is also figuring out, okay, there are 50 states, like where are you going to incorporate? I know the default is Delaware, but Delaware has done a great job in terms of branding and positioning itself. But if it is you're going to have boots on the ground, then you would actually need to consider being incorporated in the state in which you will have nexus. So that's the thing with the US. It's 50 different states, and in each one you need to get permission to do business. I know it's one country, but they are, each state has its own rules. So yes, you can incorporate in Delaware, but that does not give you permission to do business in New York or Florida or California. So you need to sit with your advisors and work that through, like where you're going to be based or where you're going to be hiring staff. That would have some bearing. And then you need to think about banking as well. So incorporation is relatively easy and fast, probably not as efficient as Singapore, but it is pretty efficient. Banking, however, is a different type of challenge. So with the travel restrictions, typically with a traditional bank, you would need to actually be based, you need to physically go to the US to open a bank account. But that is, of course, a bit challenging right now because non-essential travel has been blocked. We'll talk about immigration later on. But there are challenger banks that are like TransferWise and, a whole bunch of others. I'm not advertising, I'm not promoting any one over the other. All I'm pointing out is that there are a lot of non-traditional banks. Now, non-traditional banks work with some business models, but not so well with others. And, again, speak to your advisor before making that kind of decision because it has longer term implications. Then I want to talk about substance. Just forming a company is no big deal because the rules of Singapore are pretty clear. If any company, regardless of where it's incorporated, if management and control, those are the two tests, right? Management and control, Singapore. If management and control is being exercised from Singapore, you have a Singapore company. So it may be kind of counterproductive. Yes, you form a company in the US, but you're going to operate it from Singapore. It's going to be treated like a Singapore company, and it creates all sorts of complexities. So the point is that you probably want to have a conversation with your advisors about having substance in the US. What do I mean by that? You need to have key decision makers, someone who is credible, someone who's at the right level, representing your interests in the US and being attached to that company so that if challenged, it'll be easier to make the case that this is not just a shell company in the US. It is an operating company doing real business in the US because you have boots on the ground there. Compliance can be a minefield. I'm not just talking about taxes here. I think I don't need to tell you that US taxes compared to Singapore, Malaysia, or Hong Kong, US taxes are pretty complex. You have federal taxes, you have state taxes, you have city taxes, you have local taxes, you have direct and indirect taxes, which we can go into later on because someone asked questions about that. So yes, compliance is a big deal, but there's also SEC. SEC would be the Security and Exchange Commission, which is the equivalent of the Monetary Authority of Singapore, kind of. the MAS in Singapore. So basically, if it is that you're going to the US to raise funds, there are rules. I know people talk about, oh, friends and family exemption. There is no friends and family exemption. There is less of a regulatory burden depending on who you're going to raise funds from, but there are compliance requirements regardless. Once you're raising money, there are compliance requirements. So you need to be aware of that and make sure that you don't run afoul of the rules unintentionally. I'm not saying that anyone is going to do anything deliberately, but just be aware that there are a lot of rules to pay attention to. And transfer pricing, because chances are that this is something that's frequently overlooked, because you're probably going to maintain some functions in Asia. Maybe your technology team is going to remain in Singapore or Vietnam, Cambodia, wherever it is you have your tech team. They may remain there, and you move certain functions to the US. But the point is, then you have related parties, right? Because the entity in Singapore and Asia is providing some sort of shared service to the one in the US, technology or whatever the case may be. The point is that once they're intercompany transactions, you need to be conscious of transfer pricing. And so transfer pricing is the discipline where you ensure that intercompany transactions are priced in the right way. Because of course, at least from a US point of view, or whatever jurisdiction is the higher tax, the tax authority is going to be concerned that you're going to be shifting profit from the higher tax jurisdiction, which if you're comparing the US to Singapore is going to be the US. You're going to be trying to book as much profit as possible in Singapore. So from the US perspective, they're going to want to see that whatever the intercompany transactions are, they're priced in the right way. They're priced in arm's length. So you're not messing around with profit. And then there's the immigration issues. And again, this kind of ties back to the incorporation. If some of the founders or your key decision makers from Singapore, from Asia are going to move to the US, you would need to be incorporating with that in mind. So we had, for example, of a client who incorporated in Delaware because everybody incorporates in Delaware for whatever reason. But then, the mechanics and the nuts and bolts of his operation, a tech company as well, he's going to be based in Miami. He's going to be based in South Florida. So, what was the point of incorporating in Delaware? And for him to get the visa, whether it's an E visa, an L visa, or whatever, permission to work in the US, you need to have the incorporation set up right. So pay attention, get people on board as part of your advisory team who know what they're talking about. So please keep that in mind. So in terms of, obvious shameless plug, we provide that sort of turnkey solution in that we're familiar with both Singapore and the US, and we could provide at least most of the necessary services. Things like immigration, we work hand in glove with immigration attorneys in the US, as well as tax lawyers for more complex structures. So this, my contact details, I think for those who are on Zoom, it's actually below. If you're watching this on Facebook or LinkedIn or whatever, you can just contact any of us directly. So I'm going to stop sharing now and get to what you guys came for, right? So please feel free. I did get some questions, but if you have further questions, feel free to type it below. And what I'll do now is I will jump to the questions that were previously submitted. Okay. All right. The choice of entity, like what entity do you incorporate, right? You're going to incorporate a company, but what do you mean by a company? It can be an LLC, it can be an S Corp, it can be a C Corp. Some people use different structures, offshore, onshore, whatever. That is no one size fits all, and that's the thing when you go to an incorporation mill. They are just churning out literally hundreds, if not thousands, of incorporations a day or a week or whatever. They are not necessarily looking to work with you to see what works in your best interest. They just want to sell you a product. And yeah, I mean, they're running a business, so nobody's criticizing them. That's just the reality of it. So you need to sit with an advisor and work out an S Corp. Mainly, it's going to be an LLC or a C Corp. An S Corp does not allow foreign shareholders. So it's going to be an LLC or an S or a C Corp. As to what the difference is, an LLC is a limited liability company. A C Corp is a corporation that is governed by Section C of the tax code, of some parts of the tax code. Essentially, if I'm to, again, this should be a really in-depth conversation that you're going to have with your advisor. But the LLC, if I'm going to draw a comparison to entity structures in Singapore, I would say it's close to an LLP, a limited liability partnership, in the sense that from a tax perspective, it's transparent. So from a tax perspective, it's transparent. Now, from a commercial perspective, it is a company. It is a limited liability company. But so what you have essentially is a hybrid entity. It is a hybrid entity. The other alternative is a C Corp. A C Corp is what we would know in Singapore as a private limited. So it is a properly regular private limited, an incorporated entity. Now, as to which one is better, it really depends on your circumstances. No one size fits all. What I can tell you is that most people would tend to go with a C Corp, and I'm not advising you. All I'm saying is that most entrepreneurs who are moving to the US would go with a C Corp. A C Corp offers a high degree of formality, and as a result, the protection, because the entity that you form is a separate person from you, a separate legal person from the founders. And that veil of incorporation between those that have created the entity and the entity itself, the veil tends to be stronger with a C Corp. And investors, if you're looking to raise funds, investors tend to prefer a C Corp. But that doesn't mean that you should get a C Corp. For some people, it would be an LLC that's owned by a Singapore Private Limited, or an LLC that's owned by BVI, or a trust. It really depends. So you get advice and you find the vehicle that works best for you and your circumstances. But as you are no doubt going to be aware, the US is a very litigious society, a very litigious commercial environment. Lawsuits are just one of the tools of doing business. If you haven't been sued, that just means you haven't been in business long enough. I mean, I'm just being completely honest. So I know it's the guy selling an incorporation for like $200 or whatever, but you probably, if you can afford it, of course, you're gonna probably want to spend more money getting things done in not in a better way, but in a way that's really tailored to your situation. So you want to make sure the shareholders agreement may not be a boilerplate, but works for you, given that there may be foreign shareholders, and then you want to bring in US domestic shareholders. You want to create documentation, or you want to create a structure that is aware of what your situation is and what your desired outcomes would be. So, and if it is you're going to hire employees, depending on which state you're going to be operating in, because again, I said different states, different rules, you may want to get advice from not just people who can help you with payroll, but with employee contracts, or if you're going to use independent contractors, attorneys or legal advisors that are familiar with onboarding and managing independent contractors, because you just don't want any problems. And depending on which state you're operating in, sometimes the legal system may be biased in favor of employees. And in some jurisdictions in the US, it may be favored towards employers. It really depends on the situation, it depends on the jurisdiction. But the point is, you want to get advice and not just set up a cheap company, because there may be other implications to consider. Next one, banking options. Next question was banking options. Again, as I mentioned previously, one size does not fit all. So, you know, some people, they're doing, their business model entails lots of online transactions, and they're happy to use some of the challenger banks that integrate well with Stripe and PayPal and whatever else, WorldPay or whatever the payment platforms. Sometimes they want to work with a dedicated payment services provider. And we do introduce you to advisors, or we can have that conversation with you because we work with clients who want to do that, because as you know, the transaction fees from Stripe and PayPal and Square, they're not exactly cheap. You know, it could be as high as 5% per whatever. So it really sometimes is worth considering all the options. And depending on your payment platform, depending on your business model, sometimes a challenger bank can do the job, but more times than not, you probably want to have a traditional bank account as well. And in order to do that, you would need to be in the US, of course, whereas with the challenger banks, you can open those accounts remotely. With a traditional bank, you would need boots on the ground. But don't worry, and I think we'll touch on that with one of the questions asked further down. We do work with US immigration attorneys who can help you, you know, file the correct paperwork, figure out, because the US visa system, like the tax system, is quite complex. You know, there are at least 130 visa categories, right? So how do you know which one works best for your particular situation? Depending on what passport you carry, depending on where the parent company may be. Yeah, so anyway, we'll talk about that later on. So yeah, next question that was asked. Oh yeah, someone is saying, yeah, taxes are complicated compared to Singapore. Yes, they are. Can you talk a bit about direct and indirect taxes? Well, the direct, again, but in this space is kind of similar to Singapore. So Singapore, you have your direct taxes, which will be your corporate taxes for your companies, and your individual taxes for yourself as an employee or business owner, right? And then you have your indirect taxes, which will be your GST. In the US, it's the same, similar. You have corporate taxes for your company. Assuming that it is a C Corp, because remember we said the LLC is like a partnership-ish in Singapore. So it does not actually, it may file a return, but it doesn't pay tax. If you're using an LLC, the burden lies in would fall with the owner or the members, as we say, the members of an LLC, because an LLC doesn't have shareholders. An LLC has members. So the members, whether the members are corporate members or individual members, they have the burden for the LLC. For the C Corp, that's similar to a private limited in Singapore. So they will pay corporate tax on its own. And when there's a distribution of dividends or salary or whatever the case may be, the recipient may be subject to taxes. Now, there are indirect taxes, and the indirect taxes tend to be unnecessarily complicated. You know, we call them sales and use taxes, and there are about 10,000 sales and use tax jurisdictions in the U.S. And the thresholds are different from state to state, from jurisdiction to jurisdiction. The amount of the sales and use tax will vary, and the filing requirement will vary as well. Many of them allow for automated submissions. Some of them are manual, so you actually have to, you know, do things the old-fashioned way. There are software providers and service providers that can help you. What we advise clients to do is, again, part of the process of setting up in the US, you get what we call a sales and use tax audit. where we have partners that do sales and use tax audits. So that can advise you of the potential sales and use tax exposure and ensure that you remain compliant and you have no surprises. Because I've seen it time and time again. We have a client that, when they rushed, they set up a company and they started in the US and they started selling online. And they're doing pretty well, 7 figures after the first year. So it's a pretty good start. But they were unaware of the sales and use tax obligations. And when, they sat with an advisor by that stage, they had been trading for 1 or 2 years, and they had a quite sizable sales and use tax obligation to settle. And then you have to talk about whether you try to go into amnesty or it becomes quite complex, and the penalties and interest could be aggressive as well. And we've taken clients through that process, Singaporean clients who did not know, they honestly didn't know that there were varying thresholds. They may have Googled, and Google says, some guy in some chat group said that the threshold is $100,000 or 200 units. Yeah, generally speaking, but some states are $50,000, some states are 100 units. It really depends. Some may be lower, some may be higher. It really, really depends. So it makes sense to speak with an advisor. Otherwise, the complications of trying to fix unintended mistakes can be painful, can be very, very painful. We've seen companies actually go out of business because when they have to write checks to pay all these back taxes and fines, that's it, they go bust. So it's something to consider, Next question. Okay, we found a really cheap US-based bookkeeper. Why should we pay more? And I guess that's your question. You're right, because when you're starting a business, as a startup, you're entering a new market. It is tough because cash is king. Cash flow is really, really important, and you may do, you need to balance conflicting demands. Do I spend the limited cash we have in marketing and actually getting the business up and running, or do we spend that cash on the administrative side, on making sure we don't go with the cheapest possible accountant or lawyer or whatever? We pay a bit more to make sure the foundation is right. I can't answer that for you as a business owner, as an entrepreneur. What I can say is that you are probably expanding to the US or re-domiciling to the US with a long-term plan in mind. You're playing the long game. It's not a short game. And you are building a house. You're building a house. And you need to lay the right foundation. And if the foundation is weak, you're going to build a weak structure. If the foundation is rock solid, you're good. So circling back to this person's comment/question, you may, it's yes, you get someone who's able to do your accounting and your tax on the cheap, but you need to weigh that and you need to have that conversation. You're walking into an environment that is completely unfamiliar to you. Do you trust your future in someone who's, it's kind of like someone who's offering you a deal on a cheap parachute? Do you pick the cheapest parachute on the shelf? Some people do, some people don't. Because yes, there's really good cloud accounting software, there's QuickBooks, there's Xero, and they make it really easy. But at some point, the person that's preparing those financials need to understand your business model. It's not just debits and credits or recording transactions. It needs to be done with a thorough knowledge of your business model, because some transactions are subject to interpretation. And at the beginning, yes, you may not have any profits, so therefore you don't need to think about tax, right? Because thinking about tax is a luxury for people who are actually making money. But at some point in time, you will come into profit if you're doing the right things and you're in it for the long game. And you would have problems if things were not done in the best way for your company at the beginning. I'm just throwing that out there. And when you begin to negotiate valuation and you're going to onboard third-party investors, they're going to have a look at your books. And you may have a valuation in your mind. You know, there's always that divide between what you as a founder think the value of your company is and what third parties think it may be. But you are just making it really easy for a third party investor to discount the value of your company if your books aren't in order, because you just went with, you jumped out of the plane with the cheapest parachute that was on the shelf, right? So I'd say don't put a cost there. You're looking for an accountant who is, of course, qualified, but is willing and able to spend time with you to understand your business and make sure that the financials represent your business in the best possible way. And don't create any issues that someone could manipulate and exploit when they find it and they're ready to invest and they use it in their favor. So that's my answer. It's long-winded, but I've seen it happen time and time again. Next question. We're a startup and cash is tight. I know. Yep, I know how that goes. We're using online service providers who provide boiler templates for contracts and SEC filings and stuff like that. Yeah, so I'm just kind of summarizing what they said. And again, just like with the accounting, it is hard to balance. There are lots, there are lots of great entities or companies or service providers within the startup ecosystem that do provide great value when it comes to your SEC filings, when it comes to drafting shareholder agreements, when it comes to drafting, you know, employee contracts with independent contractors, whatever it is you're looking for, there's an easy solution. You know, you just answer a few questions and then it spits out something that's supposed to work for you. Again, just like with the bookkeeping example the previous person asked, it's up to you. It's really, really up to you. You need to balance what I know. It's not hard, it's not easy, it is conflicting and it is difficult. Do I allocate the limited cash that I have to marketing and getting the business up and running, or setting up the business in the right way? It's either way, you know, the pros and cons to however you decide to weight it. But as you know, as tax professionals, as accountants, and working with attorneys, we've seen the pain that comes with doing things on the cheap. And you know, you took a boiler template for a shareholders agreement, and a more savvy investor, they're able to exploit the gaps and the loopholes in it to get control of your company, to push you out, to give you trouble, you know, whatever the case may be. And if there are any gaps in the filings, yes, you went with a discounted service provider for any of the compliance work, whether it's with the SEC or the Internal Revenue Service or the state tax authorities. In the US, even though you use a professional advisor, you are ultimately responsible for everything. You sign those documents, you're the responsible. There's a concept of a responsible individual. When it's like for sales and use tax, whichever it is, there's a line when you're registering, who is the responsible individual. And even though you hired and you paid someone whom you believed and who represented themselves to be a qualified professional, if they make mistakes, you are responsible, not necessarily them. You are responsible. So just keep that in mind. And again, I'm not saying to go with a service provider that services a Fortune 500 company, but I'm also cautioning against the guy who does, yeah, I do everything, fixed fee, $200. I'll give you a package, I'll give you a deal. So you're probably looking for somebody in between. They're not, they're not working for Tesla, but they are not on the cheapest provider as well. They're somewhere in between, and someone that you can have a conversation with, who can make time for you and make sure that you understand everything that you sign. Don't just sign things that are, well, DocuSign or whatever. Any document that's thrown in front of you, someone who can sit with you and go through line by line so you understand whatever it is you're getting yourself into, and who's happy to answer your questions. So I'm just throwing that out there. Next question. There is no tax treaty between the US and Singapore. Would I be double taxed? Okay, I see where you're going with this. The Singapore, all things being equal, it's territorial tax, right? So you as a founder, you as an entrepreneur, you're just being taxed on your Singapore source income. If it is as a founder, as a CEO, as a chairman, or whatever your title is, as a key decision maker, you shift your company, or you start up a holding company or an operating company or whatever it is in the US, and you move to the US, you will be subject to taxes on your worldwide income. Worldwide income. So whatever, like if you rented your condo in Singapore, that's going to be taxed by the US. If you sold your condo in Singapore, that's subject to capital gains tax in the US. So you will be subject to tax on your worldwide income. You don't need to worry typically about double taxation, even though there's no tax treaty between Singapore and the US. There's a tax treaty with the US and Indonesia, the US and Philippines, US and Australia, and so on, but there's none with Singapore, nor with Malaysia. You don't need to worry about that because both the US and Singapore typically respect the concept of a foreign tax credit. So that money typically should not be taxed twice, because once you can show that you have paid taxes in the other jurisdiction, so you made money, you have an additional source of income from whatever else, your other companies that you're running in Singapore, and you collect that while in the US. Once you show that you've already paid some taxes in Singapore on it, you'll only pay the difference with what the US assesses. Now, there are ways in which, unfortunately, you can be double taxed, and it tends to occur at the state tax level. So, because remember, the federal government will tax you, but the state also taxes you, unless you're in one of the, let's say, 7 or so states that do not have an income tax, like Florida, Nevada, Tennessee, etc. The states don't always recognize foreign tax credits. So yes, under some circumstances, you may be double taxed. So the point is that as part of your transition process, as part of your planning process, you probably want to undergo some sort of what we call pre-immigration planning, where you sit with someone who understands Singapore tax as well as US tax, and you consult with them, and you understand the tax implications of not just your business, because obviously your business, but for you personally as an entrepreneur, as a business owner, as an investor, because things that are tax-free in Singapore, for example, capital gains and dividends are tax-free in Singapore, that's going to be taxed in the US. So you want to understand the implication from a tax perspective of your income subject to worldwide tax by the US. And that gives you an opportunity, if you see that a particular income stream you have may be subject to tax and you're not comfortable with it, you can put some mitigation strategies in play before you enter the US. So you can structure your holdings, maybe not to completely avoid taxes, but at least to minimize the tax burden. So there is value in tax planning, pre-immigration tax planning. All right, next question. Non-essential travel is banned. How do we get into the US? Immigration attorneys, just like Singapore, non-essential travel is banned into Singapore, right? But if it is you on an employment pass or whatever your case may be, you are legally applying to get into Singapore, you can make the application, and Singapore will consider it, and you will maybe get permission to enter. Same with the US, but whereas with Singapore, again, Singapore spoils us in terms of how efficiently run everything is. So for the most part, you can navigate through the process of getting an employment pass and entering Singapore or dependent pass. You could kind of navigate that on your own. With the US, it's extremely difficult to do it on your own. Most people who operate at the level of our typical clients, they definitely utilize qualified and experienced immigration attorneys. It is a must. So yes, things are closed, but we're seeing our clients being assisted in getting the right visa to enter all the time. So the US is still open for business. That's a takeaway. The US is open for business. And we can introduce you to immigration attorneys. So that's the point. Next question. What do we mean by transfer pricing? Transfer pricing as a concept actually exists in Singapore as well. It was introduced a few years ago, I think. It's relatively new to Singapore. It's been in the US tax code for a long time. And when you look at the history of transfer pricing, it probably actually originated in the US before the jurisdictions picked it up. So as I explained previously, transfer pricing is a discipline that requires you to properly document all your related party transactions. You sit with your advisors and you work out what is the best structure for you. Maybe it entails leaving your Singapore private limited, and maybe set up a holding company, and that same holding company owns a subsidiary in the US. Whatever, I'm not giving you advice. Sometimes the structure involves creating more than one entity. That's what I'm saying. And these entities share services. So one entity may be your technology team, tends to be. Another entity may have your IP. That is your intellectual property. So, whatever your proprietary algorithm, your branding, copyright, whatever it is, your intellectual property sits in one entity. The point is that there would be transactions among all these related entities, and you need to make sure that everything is properly documented. So you have a policy document that describes in general what are the related party transactions. Maybe marketing is done centrally, technology is done centrally, whatever the case may be, it's all documented. The functions, the assets, the risks are assessed. So basically, the team that helps you with the TP documentation needs to really get into the running of your company and be able to look for comparables and make sure that the price charged for intercompany transactions is indeed arm's length. So you create a policy document that says that it is going to be arm's length, and every time there is an intercompany transaction, you ensure and you document everything to make sure that it's provable that it was arm's length, because you can create no end of problems for yourself if it is perceived that you are attempting to manipulate profits by shifting from a higher tax to a lower tax jurisdiction. So pay attention to that. You typically need to get a third-party team on board to do that. I rarely see it done internally. So we do it, others do it. Make sure you get it done. And okay, let me see if there are any other questions. Are there any other questions? Okay, yes, I'm seeing one question. Okay. How are the banking charges in the US? Is there anything that we need to take note of? It really depends on what, banking charges for what, I guess if it's a corporate account, you have some sort of minimum balance. And if you don't maintain that minimum balance, there may be additional fees or whatever the case may be. I can't really speak because it is so diverse in terms of what people's banking needs are. and the banks that they use to fulfill those needs. What I am aware of are the transaction fees. So for those who are involved in online selling, whether it's a digital product or sometimes a physical product, or digital products, and you're using, you know, the normal platform, using Square, using Stripe, using PayPal, whatever, or, you know, WorldPay or whatever, the fees vary a lot, and those tend to be the pain points for tech companies in the US, the transaction fees. And with that in mind, we can introduce you to third-party, other payment providers, aside from the big guys, with whom you may, no guarantees, but with whom you may be able to negotiate lower transaction fees. But that also becomes complicated because they often ask, because remember everything we spoke about compliance and the concept of a responsible person, they sometimes demand that the responsible person in your company in terms of transactions is a US citizen or permanent resident, as opposed to someone on a work permit. So there may be additional restrictions, but I think once you work with the right advisors, you should be able to negotiate as much as possible. Let's see if any other questions. Okay. Okay. So I'm just looking on the other screens for questions. Okay. All right. And I'm back onto the Zoom now. Anybody else has any questions? So in short, I would advise that if it is that for whatever your reason, you think that either re-domiciling your company in the US or setting up a subsidiary or an affiliated company in the US is the right step for you, the next step is to obviously internally, you create your business plan. And once you have some sort of plan in mind, you sit with advisors who can advise you on the tax side, on the compliance side, the SEC side, if you're going to be there to raise funds, and on the immigration side, if it is that key as a founder, you want to relocate to the US. So that's probably the sequence of steps you need to make. And it's helpful if the team that you're working with understands both the Singapore side as well as the US side. So otherwise you have to go back and forth between your Singapore advisors and then your US advisors. So, okay, no further questions. Okay, thank you very much. So please feel free to follow up. For those of us in Zoom, just have a look. I think Hannah, my colleague, she put our contact details below. Our website is htj.tax. That's htj.tax, short for taxation. And we have like over 1,000 articles on international tax. We also put out tax videos every day as well. So we always keep those who are within our little ecosystem aware of the newest tax rules and ways in which they can do things in the right way, but also in a smarter and efficient way. Feel free to reach out if you want a free complimentary consult, htj.tax. Thank you for joining this evening. Have a good evening, and I will see you next time. Bye-bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth? We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.